Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence.
The ripple effects of the tariff moves are clearly showing in the dollar. After initially strengthening when tariffs were imposed on Mexico and Canada, the dollar has since retreated as negotiations progressed, leading to significant correction in the dollar index. While the broader dollar has taken a breather, some currencies like the Indian rupee continue to struggle. Despite the dollar's pullback, the rupee hit fresh all-time lows, with growing speculation that pressure is building on the RBI to cut rates. Good morning, JK. Broad dollar weakness yesterday, yet the rupee remained under pressure. How are you interpreting these moves?
Good morning, Swaraj. Yes, perhaps the most telling move yesterday happened in the rupee, which weakened nearly 0.5% intraday. And a significant aspect was that it fell even as the dollar has been falling against other currencies, including Chinese yuan. The underlying reason was a reported large flow initially, later intensified by stop loss buying from importers. And some have even been positioning themselves for weakness to emerge, more weakness to emerge on rupee after possible rate cut by RBI tomorrow. So central bank intervention was, of course, conspicuous by its absence, in keeping with their recent benign approach. While some PSU banks have even been seen buying on the way up, perhaps covering for their clients. uh, we did see some offers at 87.50 to keep rupee from falling further. So it appears that RBI is still, okay to be letting the rupee move in line with overall fundamentals and also the global movements. But yesterday's move was somewhat, not in that direction, but it was driven by flows. Maybe I think if this approach is continued, then if we do see more strength returning to dollar for any reason, we could see the rupee even weaken more. Also, if you look at the rupees move in the last few months, it has been on a free fall since December. Coinciding with the regime change at RBI as well, we had seen rupee each fall in December and also in January. Rupee was in the beginning of December at 84.59. Since then, we moved up to 86.60 late January, and we already moved almost 1 rupee in this month. So it has definitely been a free fall, considering or rather comparing with how it has been moving. So going forward, I think we should definitely be prepared for more weakness if the dollar strengthens further abroad. And of course, the flows will also be a matter. And immediate concern would be what RBI does tomorrow. And more and more people are inclined to think that RBI will cut rate to further growth and also to supplement the efforts of the governments in their budget. So there's something that we need to wait for a little over 24 hours to assess. Now, on the global market, why the dollar weakened? Yes, there was a ripple effect of the Trump's postponing tariff imposition on Canada and Mexico, and also not so severe action on Chinese side. Rather, there was no major retaliation from Chinese, and Trump is expected to have a discussion with Xi as well. In this background, there was some good short covering in the dollar, or rather, long cutting in the dollar, short covering in the currency, so helping the euro recover. And also importantly, Japanese yen has been strengthening, quietly, led by more rate hike belief from the Bank of Japan in the coming months. So because the wage increase data showed 0.6%, which is a record increase in the Japanese economy. So yen strength on its own, which also is affected by the yield differential narrowing with the US, and then of course the short covering and other currencies like Aussie dollar and Canadian dollar, which have been hit very badly. That's the background of the dollar weakness. In the US market, the weakness got intensified, particularly after the ISM services report and the trade numbers were released. Like ADP private jobs report was better than expected, at 1,83,000. Expectation was 1,50,000. But the trade balance, or rather the trade deficit in the US, increased by almost 25% in the month of December. And this was, of course, partly due to the importers in US stocking up goods ahead of the expected tariff imposition, which could affect the supply chain. But even then, this high deficit was something that the dollar had. A dollar got sold off on the back of. And then we had the ISM report, which again came quite underwhelming. Headline index was down from 54 to 52.8. Excepting the employment, which went up, we had drop in the overall business activity. New orders were big pull down, and of course the prices paid were also at 60.4 versus 64.4. Although that was quite high, well above the expansion territory. So that again pulled down the yields. The 10-year yield almost touched 4.4%. And just a few days back, it had traded 4.55 after the Trump withdrew immediate imposition of tariffs. So the yield falling also aided the recovery in the currencies, particularly on the yen, which already has some more factors going for it. And then finally, there was a statement from the Richmond Fed president, Mr. Barkin, who said, I am still leaning towards more cuts this year. See inflation coming down, not going up, and the job market is stabilizing. So you would have an economy overheating. I don't see any signs of an economy overheating. So this is a statement that also, overall atmosphere was somewhat towards a weaker dollar, and that's what we saw yesterday. And today, of course, the dollar yen has also broken the 152 levels in the Asian time. This seems to be a trend that is evolving. And of course, for euro to gain more, we need at least some more positive factors from the Eurozone. Otherwise, it could stall around these levels. Definitely find it difficult to break above 1.05. For UK pound today, we have MPC meeting. The expectation is there for a 0.25% cut. But then, of course, this is well discounted. So I don't see a major downward reaction in the pound also because of that. No, I think as far as we are concerned, all eyes will be on the rupee, which has been on a free fall since December, as I said earlier, and then whether it continues is what we see. And as of now, the trend has not changed as far as the rupee is concerned. Thank you.
Thank you, JK. And just quickly summarizing, for rupee, all eyes will be on tomorrow's MPC outcome. Now there is a lot of pressure on RBI to cut rates to align with the fiscal stimulus measures being announced by the government. So all eyes will be on RBI tomorrow. For global markets, dollar weakened yesterday as trade wars did not escalate with China. So some long cutting in dollar. Japanese yen has been strengthening recently as markets are positioning for further rate hikes by the Bank of Japan. When it comes to data, it was a little bit underwhelming when it comes to ISM services, a little bit below headline numbers below expectations. US trade deficit showed an increase by 25% in December, as JK mentioned. Importers stocked up on goods ahead of tariffs. For currencies, for euro to gain more, we need some more positive factors from the Eurozone. And there is the Bank of England meeting due today. 25 basis point cut is well discounted. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.